Hello everyone. So, banking system are in turmoil, right? Well, here are just a couple of more examples that might prove this point because if previous week I talk about banking failures of three American banks with largest of them were Silicon Valley Bank, that now I'm going to Europe, and of course we have Credit Suisse, which was one of the world's more premier banks and actually was one of the flagships of and faces of global banking industry. That will give you a couple of context. It was made more than 150 years ago, 166 to be precise, and it went from, you could read it all in Wikipedia, so I wouldn't read it again, but basically it went from Swiss bank to global giant by mostly acquiring first Boston, which was investment bank in United States. So that was in the late 90s and made this bank basically made it as direct competitor with American giants, Deutsche Bank, largest French banks and largest banks from UK and Japan. So there were large banks in small circle which effectively controlled financial markets, and it went good till 2008, and then it sort of didn't, but not for Credit Suisse in some ways, because despite the fact that banks were unregulated huge conglomerates which did everything they pleased, and then reality check came with collapse of real estate and their balances were undercapitalized heavily. Credit Suisse was not in that bad position because actually, as compared to its direct competitor, ironically, Credit Suisse didn't require any government money in 2008 and managed to get ahead with it in itself. Requoting, Credit Suisse survived the credit crisis better than its competitors. Yes, I made thorough research on that, but I wouldn't requote everything. But here's the thing, Credit Suisse had issues. They had issues with its risk management branch, and it had issues with its, I would say, business model itself, because it had history to make huge fines by doing unlawful things, and they had very bad investments and partners which lost them huge amounts of money. And these things dragged Credit Suisse below, and they were not able to live after crisis of 2008 and sort of modernize their business model. That's their issue. That's their issue, and what in the very there is very good way how you could see that, and that is in Credit Suisse chart. As you could see, here is 90s. Here is growth of global financial markets and financial services, and you see how Credit Suisse went from $20 to almost $80 in those good old days in 2007. Then crisis came. There was credit crunch in 2007, crisis in 2008, and it didn't make back. As you see now, yes, there was some small bull market in early 2010s, but still, since that, if you look how S&P 500 have performed, you will see that Credit Suisse was not nearly as good as that. In fact, actually it performed worse than average fast food joint or kebab store around Europe, because it only went below and below its lows of 2008. And look at, see, from 2016 it costed $11. Like, you don't have to be trader or investor or some sort of genius to see that. Even looking at stock price, you would see that you have to do extremely large research to understand why there will be some case to invest in company like that, because in 9 times out of 10, when the bull market hits all-time high at context of S&P, but global banks are priced like that, you have to ask questions about their business model, right? And whether they are having some temporary issues or they are making slow debt. And this doesn't look, even if we exclude that takeover, this looks like slow debt to me without anything else. Stock price itself shows you this example. And actually there were a couple of bad trades in that was not trade, that was his client's trades in 2021. I have to give you a quick hint how it called, but there was one guy who was not able to trade properly, and it was causing them tens of billions of dollars. I forgot his surname. This is bad thing for video making, but the guy basically lost them 10 billions of dollars worth of money because this hedge fund was holding his money in Credit Suisse, and Credit Suisse has to simply repay their bad bets. And they had like insider trading issues, regulatory issues, which they have to make a fines for hundreds of millions or billions each year. And that was one of the things that got to them. But the tipping point of this issue was that, as always, banks have structural problems for years, and they're sitting in these levels for years. But then there might be some tipping points. For instance, rise of interest rates and failure of more riskier clients in other banks, which unrattles whole industry, which depresses all of the banks. But if bank is particularly bad, people ask questions about its capital and its ability. And its largest shareholder, Saudi National Bank, made the fact that they wouldn't give any capital. There is a quote which every financial news outlet has been saying, like, if we go above 10%, all of rules kick in, whether it will be our regulator or Swiss regulator or the European regulator. We are not inclined to get any new regulatory regime. And I can give 5 or 6 reasons, other reasons, but one of the reasons there is glass ceiling, and we are not going to entertain going beyond that. And basically this caused panic. Panic caused sharp decrease in stock price, and then Swiss National Bank wanted to avoid failure, wanted to avoid bad reputation from its actions as it was in 2008, and basically arranged meeting between UBS and Credit Suisse and hold them together as long as they made some deal. And they made a deal that Credit Suisse will be acquired by UBS for something like 3 billion, and it defaults on 100 billion worth of its debt. And how does it look in future? How they would combine these assets, what they would do with the assets they don't need, what they would do with employees, and so on. Well, it will be seen, but here how it went. Premier company, trailblazer and flagship with its industry, one of the most leading banks in the world, and probably face of Swiss banking system, were actually fared better in crisis of 2008 than most, but its business was riddled with failures in risk management and failures in overseeing its operations. So they had to pay huge fines year after year in all of its divisions, and their customers made huge bets which cost them tens of billions of dollars, especially in recent years in 2021. And it showed in the bank's model that it was not able to operate, and you could see that in the times of greatest bull market in history, it simply didn't perform. And once financial markets went to worse, interest rates rose, and weakest players were started to get into line, it was the day of Credit Suisse. This was just a tipping point. That quote was just a tipping point for problems which there were for years. So it happens in times of turmoil, and who knows, maybe there will be other scandals and other issues with business models which are bad. Because if Credit Suisse had a strong business model, strong returns on equity and profit growth, firstly you wouldn't see this kind of share price, and secondly they would have no issues regards capital